That's why we end up having to have these conversations like, how do we really need to handle this? What makes sense? How are we going to get the clearest idea of what you as an agency are capable of, and what how we want to calculate your profitability versus what is really living outside of your walls.
Welcome to the Agency Profit Podcast, a show dedicated to going deep space on agency operations, which is just as nerdy as it sounds. I'm your host, Marcel Petitpoff. I'm the CEO of Parakeeto, a firm that helps digital and creative agencies measure and improve their profitability. Join me as I interview some of the smartest thought leaders and agency owners in our space and go deep into operations, metrics, and all the other things you need to get right so you can spend less time worrying about operations and more time executing on your vision.
Welcome to the Agency Profit Podcast. I am today's host, Kristen Kelly, and I'm here with my colleague, Carson Pierce. Carson, welcome.
Thanks. It feels so freeing to not be a host myself this time. I've been doing a few of them, so I'm going to let you take charge this time.
It also feels super awkward for one of us to be said host, right? When really I feel like we're just having a little chat. So anyway.
Everyone gets to listen in.
Here we are again for another just chat. But today, I think I'm excited about because you and I decided to basically put a process in place recently where we are leveraging our friend Claude to analyze calls on a regular basis so that for a number of reasons, but also just to surface insights that we can talk about together. And this is just really helpful, I think, both for us, but also to bring content to our listeners about things that they're likely wondering about because they come up all the time on our calls. So today's kind of like the first pass at that approach. And today we're going to be talking about a fun one. It's going to be about pass-through.
One that, I feel like almost every agency that we work with has some kind of issue around pass-through and understanding pass-through and how do we handle it. And of course, the pitfalls that you fall into if you don't understand it properly. So, recently we both had clients that ran into some pretty significant issues here. So I'm excited to talk about that.
Yeah, me too. So before we kind of dig into specific examples so that our listeners can relate, let's actually set the stage by kind of defining a little bit more of a definition around pass-through. So Parakeeto basically defines this as any money that comes from a client but passes through the agency to another vendor, where the agency is not really responsible for the profitability of that cost or that work. So examples of that could be advertising spend, so paid media budgets that you manage for a client, print budgets, white label partners, production costs, any hard costs really that's billed back to the client, like even stock imagery, things of that nature.
Yeah, and the way that I normally think about this is money that doesn't belong to you. So if you're thinking about how profitable your agency is, this is not your money. This is not part of your profitability. This is someone else's profitability. So like the example about, stock photography, that's the stock photography company's money. They're going to make their profit on it. For you, it's just money that came in and went back out again. You might have a markup on it and that's a different thing. But what we're trying to figure out how profitable you are as an agency, and we have to strip away all the stuff that really doesn't belong with you.
Exactly. That's the more succinct way that I really like saying it too. The money that doesn't belong to you. Yeah. The example that Marcel likes to give, I think, in just a number of talks, you'll hear him mention this topic. It's, imagine this would be like if Airbnb was considering all the money for a booking as their revenue instead of the 15% cut that they actually made. So it's not unlike that, just to kind of span across industries and bring it to a more relatable spot. So Carson, walk us through kind of how also pass-through relates to AGI. And I think probably before we do that, let's define AGI and kind of that whole concept.
Yeah. So agency gross income, AGI, that's the number that we're using as the denominator on so many of the calculations that we're thinking about when we're trying to evaluate the financial health of an agency. So it is different than your top line revenue. So top line revenue is all the money that you're putting into your bank account from all your clients. All the billings you send out, all comes to you, goes into your bank account. what we're taking away from that is the pass through that we were just discussing. So when we remove all the money that doesn't belong to you, that's just going straight out to other vendors, we're left with AGI. So agency gross income is really the number that we're thinking about in terms of what do you look like as an agency? The difference being, and we're going to get into specific examples of this in a second, but you might bill out $5 million worth of billings, but if most of that is going out the door to somewhere else, you might find that you're actually only a $1 million agency. And that's the way we need to think about it, because we can get into some real trouble if we are not really fully understanding who you are and what your revenues look like.
The specific formula is top line revenue minus pass-through is AGI. And yeah, to your point, the real danger with pass-through of any kind, basically, or the trap that people can fall into is, spending and decision-making as though all that revenue is yours to keep, as though you're a much larger agency than you are.
So let's get into some specific examples. I know we each have ones that we've been working with recently, that are slightly different, but tell the same story. But you've got one particularly around media spend. So tell us a little bit about that one.
Yeah. So this is a really common thing. Media is a ubiquitous type thing for agencies to manage for their agency or for their clients, rather. This particular client example, this was about a $3 million top line revenue or agency. But when we stripped away all of the media planning and buying income, they were really more like a 1.5. So their chart of accounts just happened to be kind of messy. It had changed hands across several bookkeepers. And the pass-through dollars were kind of like spread across a couple of different records in that chart of accounts. So it was deceiving, and it made the agency look far bigger and more profitable than it was. And, the founder's perception of, not just like the size, which is more like a vanity metric of the agency, but also just his frame of mind when he was making certain decisions, just looking at his monthly P&L was just really skewed and off. And I think it was quite eye-opening to kind of see contextually the AGI number kind of surface. And that's one approach I've seen when I deal with clients who manage a lot of media dollars. It's usually like coming in as an inflow, and then you got to look for the outflow. Like where's it coming in and out? Make sure they correlate. Identify how much sometimes markup is involved, and even with that causes like some confusion if it's not kind of understood how much of that money gets siphoned off as like markup that belongs to the agency. So that's one approach. Another recent client I work with just had the media dollars not flow in through their P&L at all. They kept it off the books, but it was on their balance sheet in just this like massive bucket account. And the confusion there was they just thought they had a ton of cash on hand. And they're like, wow, they look at their balance sheet and they think that at any given time, they've just got all this money to kind of like a slush almost. And it's like, that is almost belongs in like a third entity that just doesn't belong, like a separate account, a bank account, but it doesn't almost even belong in your sphere if we're going to treat it that way. If you don't want it showing on the P&L, and the preference is to keep it separate, it's like, it really caused some confusion there in terms of their just perception of what was available to them at any given time, their amount of cash on hand. And it got very tricky to upkeep over time, especially keeping track of like which dollars belong to which client, how much of said dollars have been spent so far for certain clients. And there's just all kinds of complications that can come with media pass through if we don't start with the first principle of, okay, this money doesn't belong to us. And so therefore, how do we want to treat it? Because there's multiple ways to treat it. It's just that we need to get clear on the fact first that like, it just doesn't belong to us.
Yeah. And I think I've seen agencies where they don't even touch the pass through. I mean, I guess it's not pass through at that point at all, but they'll just get their clients to pay for their media spend directly. Now, you're cutting yourself out of a potential markup situation. Like if they're just, you would have your markup built into your fees at that point, I guess, but at least it simplifies a little bit. And like, we're not taking your money. We're not responsible for paying these other vendors. And depending on how you receive and spend money, you can get yourself into a situation of being a little bit of a bank for your clients at that point. So like, we don't want to get into that either. But there's a simplification there of just not not doing it at all.
I mean, you're touching on loosely like also a really important consideration too, which is the cash flow and cash management piece of this, where pass through. Ideally, you're getting a lot of the, depending on what it is, but especially media. Ideally, you're getting that upfront, and whether that's like on a quarterly basis, based on planned spend or annualized, whatever is appropriate for the nature of the client. But you really are a bank if you don't collect those funds up front. You're just fronting this money. And I've seen a lot of clients get themselves into cash flow trouble where they just aren't getting, reimbursed, or maybe they're forgetting to invoice properly, or just a number of things can go wrong when we don't manage the timing of getting those funds.
Yeah. So that was your example. Anything else you want to add before I jump into some of mine?
No, I'm really curious. You've got actually an example with a client that was heavy on events. So let's get into that.
I actually have two from the last year that I worked with that did a lot of events management. One of them, just at a sort of macro level for the whole agency, on paper, if you don't look closely enough, they look like, I think it was like a $10 million a year agency. And they kind of operated as if they were a $10 million a year agency. The reality is something like 80% of that money went straight back out to their events costs. So hotels, the booth setups, food, like all of this stuff was kind of in and back out again. So they were not a $10 million agency. They were a $2 million agency. The problem was all of their spending. So we talk a lot about, hey, your, your sales and marketing spending, your admin spending, whatever, should be a percentage of AGI. Well, they were thinking about their spending as a percentage of their top line revenue, not their AGI. So they're thinking about it as a percentage of $10 million. Like, we're fine, we're spending the right amounts, but they were spending it as a percentage of 10 million. And so when we got into the books, we realized not only were they losing money, there was no way that they could make money. There was no way to be profitable. And their balance sheet was a disaster. And it was all because of this fundamental misunderstanding of how much money belonged to them and how should they be spending accordingly. So that one, I don't think I've ever done an assessment of an agency before where at the end of it, we just looked at it and said, this is broken. You need to reimagine your whole company because what you've done is not going to work. It was pretty drastic. The other example is a bit more micro in that it was a company that did events as part of everything else that they were offering. And they were looking at each individual event in a similar way, but like it might have been a $100,000 event. And they're thinking, cool, this is a big event. But again, 80% of that was going out the door to pass through. And at that more micro level, the problem that they were running into is around staffing. So they were, again, thinking about it as a $100,000 event. We're going to send, 5 people for the weekend, or, they were building out their people costs at that $100,000 level, when in fact for them, what stayed with them, it was a $20,000 event, and dumping that much effort into it just meant that they were guaranteed to either have very, very slim margins or lose money on it entirely. The other compounding problem with that one was that this was not a one-time thing. This was a contract that was for, multiple years and multiple events. And so they had locked themselves into this situation where an event would be coming up and they almost had to start dreading it because they knew that they were sort of backed into a corner of losing money because they hadn't thought about how much of this is really ours, how much can we spend on this versus how much was passed through and didn't belong to them at all.
Do you want some free resources to help you measure and improve your profitability? If you do, then I want to tell you about our agency profitability toolkit, which you can grab absolutely free in the show notes or by heading to parakeeto.com/toolkit. It's packed with training videos, cheat sheets, templates, and all kinds of other great resources to help you start measuring and improving the essential metrics that are going to drive better profitability in your business. And it's helped thousands of other agencies around the world do the same. So I want to encourage you to go and grab a copy of that. And if you'd rather get in the fast lane and just have our team of experts guide you through the process of measuring and improving your profitability, then I want to encourage you to apply for a consultation at parakeeto.com. With that, I want to thank you again for tuning in. I hope you enjoy the episode, and I'll let you get back to it.
Yeah. And so is your experience with clients like that they are often also kind of not accounting for pass-through when it comes to their like a pricing strategy? It sounds like the events client had kind of put forth like a flat fee and just was stuck with it, as opposed to, deploying something else that like de-risked that a little bit and allowed for some flex.
Yeah, the contract sort of had set them up for failure in that they had locked themselves into something that hadn't been thought through carefully enough. Now they could probably, I don't know if you need to renegotiate a contract or if they just had to restructure what they were doing. But like, can they, instead of sending 5 people, could they send 2 people and get the same results? Like, there was some ways to manage the situation, but they fundamentally had to think about it differently first.
I've seen clients take the approach with events where they have a general idea of the hard costs they're going to incur, just sort of like offer them up as like different tiers. So knowing like a more involved event is a certain cost, another tier down is another. So it's just sort of like a graduated approach to making sure that you're covered, almost like abstracted T&M type of thing.
Yeah, and I think you touched on something there that I think is really important. But when you're breaking down your pricing, you can think about pass-through as that separate piece. Like, let's have it broken down as a separate bunch of line items on your invoice or whatnot that you is not part of what you're offering. And then you can focus in on, here's the part that's a service. We're doing the work, we're putting in the effort, and making sure you're profitable on that portion of it, regardless of what the pass-through looks like.
Yeah. That's a super important part too. So often I think it's just easy to lose sight on the effort involved, the corresponding effort internally, like the true cost basis of the thing the service you're providing. You kind of get lost in just like, well, what are these incremental pieces and the hard costs, and are we covered? And there's a whole other cost that's almost just more important, making sure that you're covering the internal time needed.
Yeah. And speaking of internal time, people time, there's a whole other case study here that almost every agency deals with at some level, which is contractors. And I would say if there's one area that we, when we're doing our assessments, when we're working with agencies, that we have to like slow down and work through carefully, it's how we handle contractors. What's passed through, what's not passed through. And I mean, you and I have both done this a lot. We've got a plan around it. We know the process. You want to walk us through a little bit about what that looks like?
Sure. Yeah. So I'm glad you brought up contractors because I think I would say for sure, especially over the past year, it's become more and more common for you and I to see clients or agencies where a large portion of their delivery team is contractors. So it's not just like these one-off folks who come in to like pinch hit for a very specialized thing that they're doing to like be additive to a project, maybe fulfilling a skill that's not in-house, but really just like true extensions of the delivery team. And that's the business model. And so they're just, it's super nuanced. It's simple, but not easy, basically. There's a framework to think about it, but it's a very nuanced conversation to try and understand the ins and outs of each of the folks that are contributing to the delivery at any given time. So anyway, with that said, you alluded to a decision tree. So basically, what we're trying to get at through the decision tree is whether or not the contractor is going to be pass-through or a delivery expense. And so the logic here is basically starting off with, A, is the person a salaried employee? That's the first question we ask. Usually with a contractor, the answer is going to be no. They're just an additional add-on. And so if the answer is yes, it's a delivery expense, they're part of the team. If the answer is no, then we go to the next question. Sequentially, then we ask, are they only fulfilling work that's designed to be passed through? Basically, is this work intended to remain outside of the business? And so answer is yes, that's a pass through. I mentioned, that let's say they're like a pinch hitter. They're coming in just to do this one very precise thing that in-house, they don't have that expertise. If the answer is yes, that's pass through. No, then we're going to keep digging. And so Next question. Does their compensation fluctuate based on delivery hours worked? Now, this one is like the muddiest of all of them usually, because oftentimes there's a mix and we want to get into the specifics about each individual. But short answer is if it's no, and they're paid consistently regardless of the work volume, then they're a delivery expense. And if the answer is yes, then we dig a level deeper. And so then we're going to ask, is it feasible to collect time tracking data for this person? Yes, they're a delivery expense, easy to track, easy to attribute. If no, we're going to go to our final question. The final question is it feasible to attribute this individual's cost to individual engagements? So last thing here is if the answer is yes, this is pass through. If the answer is no, this actually gets into shared delivery expense territory. So this is where we can't easily identify where their cost is hitting for a specific client. And so therefore, this individual's contribution is really more of just part of that shared delivery across the entire delivery function of the agency. So that type of decision tree really helps clarify where are we looking at pass through specifically, and then who is actually more of like kind of an individual contributor to the agency itself and part of just a true extension of their delivery team.
Yeah. One of the, I guess, alternative ways I like to think about some of this is if the work that the contractor is doing is part of your core business. So I was thinking back to my DDB days, and we had designers, developers, everyone in house. But if it came to like specialized illustration or photography, videography, we knew that those were outside of our walls, and they were going to be, well, we didn't think about pass through back then, but they would have been passed through. But if they're part of the core offerings of what you do, the question I'm asking myself is, am I responsible for the utilization of this person? Meaning, and that comes down to salary versus hourly, right? Like if I'm paying them a flat amount every month, whether it's salary or just like a flat fee, and I need to fill up their time to use up that allocation, that starts to feel more on the delivery side. Whereas if I only pay them when there's work, they do an hour of work, I pay them for an hour. If there's no work, I don't pay them. That becomes a more clear example for pass through.
Yeah. And that, what you're getting at there is that exact question where I think I pointed out that there's the most nuance, because oftentimes I think, and more with some of the clients I've worked with, they have chosen to stuck with this like hourly pay agreement where it's like, I'll only pay you for what you work. But they've done that in a fashion where it's also paired with like a long contract they know they've got in place, but the work doesn't predictably, they don't have like a timeline just set just yet, but they know they're going to get a certain amount of hours. It's just like when that's going to hit. So rather than bucket it even every month, they're like, you're going to adapt to this flexibility. And that's a smart way to handle it. And even though they're hourly, they are still kind of, because they're kind of on the hook for this like longevity, long time period, maybe across multiple clients, it is truly as an extension of their delivery team.
Yeah. And there are so many different ways to arrange for contractors. There's similar, but maybe opposite of what you just described is flat fee. I'm paying this person $10,000 a month, but if they go under 1 month, we're going to bank those hours and use them next month. There's, so many different permutations. And so that's why we end up having to have these conversations. Like, how do we really need to handle this? What makes sense? How are we going to get the clearest idea of what you as an agency are capable of, and what how we want to calculate your profitability versus what is really living outside of your walls.
Yeah. And it's an important concept to understand too, when clients are trying to figure out, it's to scope and price their work, because one has implications for the cost basis and the other has, the other would be treated as pass through. So it all does make a difference, like where the cost is represented. And when you're trying to figure out the margin at the project level, how much it has to do with how much AGI you're actually getting to keep at the end of the day.
Yeah. So, you're starting to get into the tactics of how to handle this stuff. And the first one is thinking about things at the project level. So what does that look like when we get down to thinking about projects, estimating projects? How do we handle, or how do we go into it thinking about this the right way?
Yeah. So basically, if from the decision tree, just talking about the people cost, right? If we've arrived at the conclusion that, something is a delivery expense, then we basically have to understand that person's cost per hour so that we can bake them into the cost basis and understand, their hourly cost times their hours and understand that contribution to the scope, right? So understanding their effort and the cost per hour. Versus a pass through where we're going to just represent that in almost like a separate column. And basically the math there is, you have to kind of add that on top of your people cost so that you can get to, first of all, an understanding of your break even. So that break even is the people cost basis plus the pass through. And then those two things together equal, what this project costs in totality. And that's where we add the 70%, add our margin on top of that in order to arrive at a target price. So just from a building blocks level, that's how we kind of think about those two things differently. They're separate entities, but anything I'm missing there, Carson?
Yeah, I mean, again, there's lots of nuance there in how you want to handle it. Do you just want to have a margin on your internal time and then pass through you're just treating as a separate thing? Do you have markup on that pass through? There's lots of like ins and outs, and you and I have gone through an exercise of trying to price this out for our clients. And it's not simple. There's a lot of, what if we did it this way? Or what if we did it that way? So it's not a simple thing, but it is definitely worth figuring out up front, because if you get it wrong, that can be a very bad thing.
Mm-hmm. Other things tactically. So we talk about the importance of making it visible on your P&L. And we talked about that a bit and some of the traps earlier, but talk to me a little bit more about your point of view on that.
Yeah. So a lot of the time, most of the P&Ls we see will have your revenue, your income section, and then it has a cost of goods sold section. And typically what we'll see in the COGS section is, your delivery team salaries, software, et cetera. And then you end up seeing your P&L from that view, which is not telling you anything about pass-through. It's useful, but it's not, the AGI component of it is muddled up in the midst of it all somewhere. So when we are looking at P&Ls, we start to break that apart. Like, show me your income. Now take out all the pass-throughs so that I really know what your AGI, your agency gross income is, and I can do some calculations after that. But for most agencies, they're not seeing it on their raw P&L, and they have to kind of go through and figure it out separate. So if there is a way to work with your bookkeeper or accountant to say, like, I want to pull out this pass-through amount first so I understand what my AGI is, and you're going to have different ways of viewing that on your P&L. It might show up as your contribution margin or your net margin, but like, we want to see it. If we can't see it, we're going to make some poor decisions everywhere else down the line from it. So it's a conversation to have with your accountant to make sure that you understand what's going on there. Yeah.
The other area I don't think we've talked about much that gets tricky is like, I see this a lot with like web agencies where they've got rows in their chart of accounts that account for hosting fees or account for different components of the web that they sort of absorb on their own because they haven't really made it a process to definitively pass that cost on to the client, even though it's clearly a cost that's part of the project itself. And so I see just these rows all the time where I have to sort of pick apart and get to the root of like, okay, how much of this are you paying for? How much is getting billed back to the client? How much ideally would get billed back to the client as pass through? And like, what's the delta there? How can we fix it? And how can we just get some more visibility around that? It's really just trying to see, like, that COGS section, man, is a huge trap for both types of costs. And you really that's where I think it's important to spend the most time just trying to figure out, okay, which pieces of this are delivery expenses versus pass through? That's the important conversation to have.
Yep, for sure. And then after you've got that set, the last component of this is just making sure you're tracking what's going on with your costs. So what are you doing for your agency clients in terms of following up on this?
Yeah, so I think there's not a prescriptive like catch-all that I can just give our listeners right now. It really does depend on like the nature of like what you're trying to track, and there's different methodologies for tracking said things. But for example, if you're like an events heavy company, let's just say, a repository of where you're tracking costs that are coming in that are tracked against the scope that was actually put in place. So if you've got a spreadsheet where you had incremental breakdown of all the costs that you're anticipating, make sure that you're reconciling against that. And, it's the same thing with media, just having some sort of mechanism for tracking, on a pretty precise level, like what's actually being spent and across which clients. I do think it's important. I think a lot of the time the weight is kind of put on the bookkeeper or loosely around some sort of like head of delivery to do this. And I'd say that the more you can empower your project managers or just someone on the day-to-day of the delivery to try and be in charge of just aggregating that information and flag anything that's coming up higher than normal, or just if a cost hasn't come in yet, where is this going to hit? Just the more we empower the people who are closest to the work, I think is the conversation I like to have with agencies, just so there's like a check and balance proactively, as opposed to waiting for finance to catch something in the rear view.
Yes, which at that point, it tends to be too late. Yeah. All right. So just to summarize everything, this is it's not a complicated topic. There is some nuance to it. There's some thought that needs to go into it, but it's a really important one that we need to get right. And if I summarize it, the way I put it before, it's talking about the money that belongs to you versus the money that was never yours to start with. It's, someone else's responsibility, someone else's profit. That fundamentally getting that right is going to be incredibly key for all your other metrics, all your other KPIs to be right. If people want to dig deeper into this, such a fun topic, we have some other resources available for that, which we will post in the show notes. We've got a whole course that's got a module just dedicated to understanding pass-through. And then we've got some other previous articles and so on that we've written that we can post links to as well. Is there anything else you want to wrap this topic up with, Kristen?
No, I think that Foundations course, Claude, is great. There is an explicit module dedicated to this. It's a great resource. We'll link it. Otherwise, feel free to DM Carson or I. We love to get very nerdy talking about this topic. So would love to hear from you. I think that's it for today. That was a fun grab bag number one of client topics.
So yeah, on future episodes, we're gonna keep listening to the common problems we are seeing with our agency clients and bring those together in future calls like this.
Yeah, sounds great. All right, thanks for tuning in, and we will see you on the next episode.
All right, thanks. Bye.
Hey, thanks so much for tuning in to today's episode. I hope you enjoyed it. And if you've ever found yourself thinking, man, I get so much value from this podcast, I wish there was something I could do to return the favor. Well, today's your lucky day because you can leave us a review wherever you're listening to this, and it is incredibly helpful. Of course, if you haven't grabbed a free copy of the Agency Profit Toolkit, go and get that. It's got tons of free resources to help you improve your profitability. If you're looking to get in the fast lane and get help from experts to improve your profitability and measure your most important metrics, then apply for a consultation at Parakeeto.com. We'd love to chat with you and figure out how we can help. With all of that, thank you so much for being a listener, and we will see you on the next episode.